Hello, this is Michael Hexter. Welcome to Politics 2100 here on YouTube. This episode I'm calling DC Policy and Media Elites Will Try to Hang Inflation on the Underpaid Working Class. So we're facing the highest levels of inflation since the 1970s here in the United States, also in other countries. And there are varying opinions about what's the most important factor in causing this inflation. And probably the most realistic assessment is that there are many factors contributing to the current inflation. Um, Energy is one of the key features of this. Uh, in other words, the bottlenecks in energy supply, also surges in demand, and then falling off of demand in the last 2 years uh, created some issues with pricing of energy, among other things, but also probably the biggest factor in our current inflation issues are bottlenecks in the supply chain that are due to about a 30-year-old strategy of just-in-time global supply chains that didn't anticipate something like a global pandemic. And in some sense, this is the previous episode about the failure to plan applies in also along in upon this issue of inflation. In other words, there's a preference for not planning in our economy, and therefore one of the features of planning in the case of supply chains would be to hold inventories and to create redundancy, and which involve some costs, upfront costs, but then dampen future spikes in cost. So, and also, so these are kind of the baseline reality. Well, also, I mean, not only these. So other factors include concentration of in the supply chain. In other words, huge monopolies or oligopolies controlling important sectors of the economy, and then from that exerting pricing power. So in other words, reporting openly now higher margins than previously, even as they complain about inflation. So meanwhile, we have policy elites like Jerome Powell of the Fed, and then also economists and economic advisors like Larry Summers and Jason Furman, basically saying that this is due to an overheated economy. There's a demand-driven um, spike in costs, and with the implication said by some but not all that this is due to the stimulus packages that were offered to ordinary people and to businesses during the course of the pandemic that overheated the economy. So most people agree that inflation is due to too many dollars chasing too few goods, and so some people are erring on the side of the too many dollars or too many currency units. It doesn't have to be dollars. And other people are saying, well, look at the goods. Look at how the supply of goods has been restricted. And they imply two different policy responses. So the raising of interest rates actually errs on the side of the too many dollars, because what raising interest rates does is it causes an artificial recession or a slowing down, a breaking of the economy brakeing, breaking of the economy, and if they're raised very high very quickly or even slowly, they can create a real true recession, and that's how uh, inflation was tamed, quote unquote, or was actually dampened in the 1980s by creating a very sharp recession in 1981, and that broke, among other things, along with um, uh, you know uh, there were some increases in the supply of fossil fuels. It was a fossil fuel driven a spike in costs in the 1970s. So the it's there's a lot of similarities with the inflation of the 1970s as currently, and we as a country decided not to really address the fundamental issues um, of that were related to our dependence on fossil energy, and decided then to err on the side of basically breaking the power of the working class, the and dampening the wage portion of prices. In other words, prices are a combination of wages, of additional costs, capital costs, and also profits. And that's where your price basic breakdown, and also interest costs, among other things. So all of that is included in the price of goods, and or materials cost, not just a capital cost, materials cost. So all of those things go into the cost of goods and services, and policy makers have a choice between targeting one or the other or all of those factors. So the weakest, unfortunately, we are again seeing a repetition of the mistake of the 1980s in treating inflation as demand driven and also wage driven, and that therefore, and demand being the demand of ordinary people for either basic goods or services or minor luxuries, okay, everyday luxuries, not but basic, subsistence goods, plus the what we consider to be, sort of basic lifestyle goods in the United States or some other countries, so forth and so on. And the pandemic also changed demand for those. It reshaped demand because people were spending more time at home, and so you had a shift in sectors in terms of demand. So that also redirected demand in certain areas. So anyway, we have policymakers though who have basically, the lesson they have learned is not to focus on the long-term supply issues, and also not to support ethically and macroeconomically the long-term, you could say, prosperity of the working class and the middle classes, and to focus on protecting the rentier class, as you call, or the creditor class, or the 5% or the 1% in our economy, the people who participate, you could call it, in the Ponzi economy, the asset inflated part of our economy, who have gotten extremely wealthy, and from that, and are less concerned with the health, over long-term health of the real economy, which would involve restructuring supply chains, outfitting our supply chains, doing a Green New Deal, and changing our whole energy and material and logistics system to not damage the climate. And also that change would involve lots of creation of jobs and lots of real work, and it's all about real goods and services, and also real wages get paid to people to do that work, to both the work of changing those systems as well as the work of operating those systems in the future. And and some of that operation would be also automated. So because we're going toward automation of many of those things, so we need to continually be creating new jobs, either publicly in the public sector via, for instance, a job guarantee. This is an idea from the modern monetary theory school, and so to enable long-term prosperity. And so the focus only on inflation, and also only on inflation, is caused by demand after this pandemic, is a way to blame the underpaid working class and the struggling middle class for the current inflation. And that is very convenient for the ruling class, for the capitalists, and for, I mean, the big capitalists, or the major corporations and the financial sector, who have really become only marginally interested in helping build a sturdy, resilient, real economy. And they have tended to focus only on their short-term gains based on their assets, and also they are concerned about inflation, but also they partly as a way to protect their own role as creditors, because inflation endangers the value of their loans to other people, because they become cheaper. The interest income that they get from that becomes less and less valuable from the loans that they've given out. So anyway, so there's therefore a class conflict going on in this policy debate about inflation, and the class, unfortunately, the working class has few strong advocates in Washington, and who are really going to focus on creating a persistent full employment economy where people are paid wages that reflect the productivity of the economy, that are where they accept that wages will be a higher portion of the economy, of the overall GDP of the economy, than they have been over the last 40 years, because it was depressed by exactly this response to inflation that created this economy that inflated the returns to capital and depressed the returns to labor, to the returns, meaning the monetary returns, and that was how, even though inflation in the 70s was only marginally due to wages being high, it was due mostly to energy prices. That nevertheless the focus of capital was on control of and defeating and minimizing and instrumentalizing the working class and the struggling middle class to their goals, very much along the lines of what Mikhail Kalecki, the Keynesian Marxist economist, who saw that not only were capitalists interested in their returns and their profits, but also in control, in political power, rather than simply an economistic idea of just maximizing profits. They also wanted to establish their dominance in the political economy. And so we see in this inflation debate then, through ideology, through the way demand focus. In other words, cutting the meager COVID assistance is demonized. It was not very much, and it marginally has contributed to inflation now. It doesn't have a zero contribution to inflation, but instead of focusing on the longer term project of restructuring supply chains, onshore. Now there's talk of onshoring supply chains, of shortening supply chains to make them more domestic and so forth and so on, to undo the damage of the 1990s, the policies of the 1990s. But the connection with inflation is not made as clearly in policy and in the actual prescriptions and the actual action items. And also those efforts would require fiscal policy, would require the Biden administration in this case, and also Congress, to line up behind that program and not just allow monetary policy, the Fed, to, which is a cheap political way or a way to avoid the political struggle around the budget that would need to happen, because we have in our Congress and also occasionally in the White House a party that thinks that government has no constructive role to play in the economy other than to just cut taxes or give out subsidies to fossil fuel companies and to military contractors, and other than that doesn't involve itself in an active role in, for instance, in restructuring the infrastructure of the economy. And so anyway, so there would be a political fight that the Biden administration, it seems, and also the current leadership of the Democratic Party doesn't have the guts to do, and also they don't have this orientation to the working class because of their corruption. There is a small progressive caucus, or the real progressive caucus, which is the Squad plus a few, and Bernie Sanders, and occasionally some other figures who seem to understand that there's a conflict there, and that they would need to focus on the real economy parts of the inflation problem, and not only just the inflation problem, but our overall economy problem, the inequality problem that we face. And that means engaging in some class struggle, and also in monetize or decorrupting our political system by banning big money from banning corporate PAC money from political donations, and banning dark money, and there's a bunch of different other things. So making our political system transparent, and making it one person, one vote, and also one, to some degree, that each person can have an equal power to influence our government. And right now, someone with several $1 billion in the bank has thousands of times more power in our society than maybe millions of times more power than a person with only a modest amount of money in their bank account. So anyway, so this conflict around, or the discussion of inflation, is about you could say a class struggle, and too few people discuss it that way, and it's obscured in jargon, and I hope I avoided some of that jargon here, but it needs to be explained in terms that don't create a club of where people need to be admitted by seeing how much jargon and fancy indirect language they can absorb and understand. So anyway, so I just wanted to put this out there. I'll put some links in the description box to some more detailed discussions of the different proposals, mostly from a modern monetary theory standpoint, because now not only modern money theory um, economists are correctly diagnosing where the inflation is coming from, but I believe that modern money theory economists are those who are most committed to the real economy portion of the economy, and also to the use of fiscal policy to and government programs based on fiscal policy. In other words, government spending on certain like port, like infrastructure, expanding ports, and decarbonizing, our energy infrastructure, all these things that would involve an enormous public investment. And modern monetary theory is the only school that currently, school of economists that currently enables us to think about that in a thoughtful way. So anyway, I hope this video was helpful, and please share some of your thoughts in the description or in the comments below, and also please like the video if you got something out of it, and also please subscribe to Politics 2100 if you're getting something out of these videos, and I will see you in the next video.